Hello and welcome to Insights from the PM's Desk. I'm Justin Plouffe, Deputy Chief Investment Officer for Global Credit at Carlisle. I'm joined today by Aren Leekong, Vice Chair and Head of Direct Lending at Carlisle. Welcome, Aren.
Thank you. Nice to be here.
You've got a really interesting background, so why don't we start by telling us a little bit about what you did before you joined Carlisle?
Sure. I've spent probably the last 25 years in finance, and you and I talk about it often. I'm probably one of the few people who's sat on the private equity side negotiating against direct lenders and banks, sat on the direct lending side running direct lending and being part of the strategy, and also for about 6 years of my career sat on the entrepreneurial side, buying a business, utilizing direct lending capital, negotiating against us. I've been lucky enough to have had a lot of time to partner with Carlisle over the last few years, being a board member and now being a part of the Carlisle team.
Really unusual to have a CEO who actually borrowed from direct lenders, now turn around and run a direct lending business. Before we go further, why don't you tell us a little bit about what direct lending is as a market?
Direct lending is the practice of providing loans, generally first lien senior secured, or that's how we think about it, to corporates and other entities in place of banks. So over the last 30 years, as the bank regulatory regime has changed and banks have, the regulators have tightened up on what banks can do, the flow of capital to credit-worthy borrowers has started to become stifled. And as part of the solution to that, folks like Carlisle and others have stepped into that void to ensure and make sure that that the flow of capital in our capital markets continues.
Now, the direct lending market has grown and changed a lot in the last decade. How do you view the return proposition today?
Direct lending is really a strategy that steps into shoes that the banks used to be in. So it's a necessary strategy for our economy. In markets where there's more volatility, costs go up. By the way, in markets where there's more volatility, the needs of borrowers also goes up. Mm-hmm. So, I would say today it's a much more volatile market, and we've had any number of black swan events over the last few years. You've had global pandemics. Right. You've had wars in Europe. You've had a banking crisis in the U.S. in the last 3 months. More volatility means less access to capital generally, means banks pull back. Our ability to step into that void to make sure that the flow of capital continues to flow is a positive. That also means in volatile times costs go up. That means for our investors, they benefit from that.
Yeah, that volatility in the market creates opportunity for direct lenders. You mentioned just a moment ago banks. And in the last 6 months, we've seen some pretty significant stress in that area, the collapse of Silicon Valley Bank, the forced merger of First Republic. Is there any risk that those stresses that took those banks down, that they're going to creep into the direct lending market?
Well, I would say that direct lenders are a direct response to issues in the banking market and the regulatory regime in the banking market. So the way we're structured here at Carlisle and many others, we're less levered. So let's take one step back. We don't take depositor capital. We take investor capital. Our investor capital is invested in us to do one thing, which is to lend directly to first lien senior secured investors or borrowers. Banks take depositor capital and leverage that 10 to 15 times. We take investor capital and either don't lever it or at maximum lever it one time.
So when we invest at Carlisle across all of our strategies, we like to think we have a differentiated approach and that there are particular edges that we have that make us better investors. How would you describe the edge that Carlisle has in investing in the direct lending markets?
For Carlisle, we operate in the mid-market. So think of the average company that we lend to as being somewhere between $50 and $80 million of EBITDA. Those are very important companies in their local market. So we operate in the core mid-market, global offices, global people, global perspective. When we're diligencing a company, you sit on our investment committee. We have our global leadership of credit sitting on our investment committee. Our global leadership already in their structures, in their funds, invest up and down the capital structure. So we're getting a global perspective up and down the capital structure, public and private. We're bringing our resources to bear in that core middle market where we have our people within Carlisle, everyone from Admiral Stavridis, the former head of NATO, all the way through to our ESG apparatus to be able to help our companies And it's not just help our companies provide us our capital back for a loan, but help our companies grow, help our investors manage risk.
Okay, last question. In today's market environment, what is your number one most exciting investment opportunity?
We get paid to provide a stable risk-adjusted return, current cash dividend. That's what our job is. And on the borrower side, ensuring that we are actually always there to step into the breach. So what's exciting to me today is it's a little bit more volatile, and therefore volatility means we're getting paid a little bit more for our capital. Volatility means that our credit documents are a little bit tighter. Volatility means that our investors benefit from all of that. So this is a little bit of an easier market to operate in, but that's more of a strategy perspective versus one deal. Because it's, for me and for you in direct lending, it's all about the entire portfolio as opposed to one transaction.
Aren, thank you so much for sharing your insights with us today. Thank all of you for tuning in, and we will see you next time on Insights from the PM's Desk.